European Union leaders are expected to reach a deal on the bloc's next 7-year budget at a summit beginning on Thursday, overcoming divisions over spending. Joining me on the line is Hugh Johnson, Chief Economist and Chairman at Hugh Johnson Advisors. Hello, Hugh. As we know, in November, the 27-nation bloc failed to agree on its €1 trillion European Union budget amid bitter clashes over spending cuts. Do you expect an agreement to be made this time?
It's really tough to say. David Cameron has been fairly clear that he wants to see some fairly significant, and we're talking about 30 billion euros cuts in the budget, the 973 billion euro budget that's been proposed. He's very, very adamant, and I might add that he's got a lot of support, or it seems that he has a lot of support from Germany and a number of other Northern European fiscally conservative countries. So it's very difficult to say that they're going to reach an agreement. I don't think the odds are any better this time than they were last November. Let's call it a 50-50 toss-up. I think they're going to have to be compromised, just as we have in the U.S. We have some ideologically hardened parties in the U.S. They also exist in Europe, and it makes it very, very difficult to reach an agreement. So call it 50-50.
EU countries are split over the EU budget as net contributors look to slash spending while others push for more cash for growth. Do you think there should be spending cuts or more cash for growth?
It's clearly a problem that Europe, and in particular the Southern European countries and the Eastern European countries, are still deeply in recessions, have significant unemployment rates, high unemployment rates, and so I would say that the real need is to try to stimulate growth. I think the attempts to impose austerity, or at least fiscal conservatism in the form of higher taxes and less spending on countries that already are mired in recessions, is simply a mistake. Timing is everything. And right now it is premature to try to cut funding or to reduce stimulus to countries that are already in recessions. It's a mistake. It's a mistake that's been being made for over 2 years, and I wouldn't want to see a continuation of that mistake. With some luck, by the end of 2013 or maybe 2014, we'll start to see growth prospects in all of those countries, and then we can sort of take our foot off the gas pedal, but until then it would be a mistake in my judgment.
The alternative could be no deal and continued uncertainty over the EU's future finances. With elections this year in Italy and Germany and European Parliament elections in 2014 likely to delay a decision for at least a year, could a delay in striking a deal cause chaos within the euro area?
It would cause ongoing concern. I think that to use the word chaos is a little bit too strong. Ongoing concern that European policymakers can't get their act together or can't reach agreements on important fiscal policy issues. But I don't think it's nearly as big an issue right now as some other issues. Quite frankly, monetary policy is carrying the day, and although this is important, I don't think would lead to chaos if an agreement was not reached. Europe would be doing what essentially was being done in the U.S. continuously, and that is kicking the can down the road. It would simply delay a decision. And let's keep in mind, cross our fingers, there may be compromise. We may see a compromise with the Northern European fiscally conservative countries such as the UK and Germany compromise and reduce their insistence on savings.
And what are your major concerns for the Eurozone at present?
Well, the major concern has to be growth. The growth of many countries, the unemployment rates are still very high, and attempting to try to impose a fiscal restraint on countries that are in recessions is simply a mistake. You also have to be concerned that the conditions, European economic conditions, are going to be aggravated by the recent rise in the euro. That's creating some problems for exporters. If that's an ongoing issue, monetary policy may again have to step up to the plate and reduce interest rates. So I think you have to be concerned on a near-term basis about the strength in the currency and the problems that's creating for the export business, which is so important to most European countries. On an ongoing basis, though, it's the general policy of imposing restraint on countries that are in recessions. That's simply a mistake and misguided.
Thanks for joining me, Hugh. That's all for now, but here at Dukascopy TV, we'll be keeping you updated the latest financial news throughout the trading week. For now, though, goodbye.